YouTube weekly. Today I'm in Toronto at a buddy's house. So here I am. I just literally went into a bedroom and closed the door. I do not have my regular setup, so the lighting might be shit and the internet also might not be ideal. So it is what it is. But what do I want to talk about today? Today was a great day. For the first time in almost a full month, we had a slight pullback in the market. And I think for the first time, some I think fear creeping in a little bit, some reality creeping in a little bit. If you look at a lot of the data set pieces, housing in many local markets is dropping significantly. GDP is strongly tied to housing. It is also dropping. Companies are laying off and putting hiring freezes in place. The lag effects of that are almost surely a long tailed recession. So that is coming. We are not in an economic boom. If you are thinking about going long on stocks right now, I would say if your time horizon is not, say, 3 years or longer, wait. If your time horizon is long, you're just going to dollar cost average in and ride it out, fine, no problem. It will get worse before it gets better. We have had one of the strongest months in the last 2.5 years. It was the strongest month since the recovery in 2020 that we had where everything ripped back. So we haven't seen strength in the market like we've seen the last month in a long time. That's not a good time to be buying. You don't want to be buying at the top of an 18% spike up with almost no down days. You want to be waiting for that pullback, that correction, even if you're bullish, waiting for that. But a lot of the signals I'm seeing are new builders are going belly up. The trades are not doing well right now. The number of people going and inquiring on houses dropping. So the traffic of people buying houses dropping. Mortgage brokers suffering right now. The number of people taking out loans much lower. Interest rates double, up 100%. Right, your cost of financing, your ability to qualify, your cost of financing is double. Your ability to qualify is halved in many cases. So that will have long-lasting impacts for the next short impacts the next 6 to 12 months, which will lead to lower comps, which will further drive prices down, and that will force us into a bit of a recession as GDP kind of pulls back. I think it's going to take some time for the Fed to move between this rock and hard place where I think we'll have rallies and bear markets. We won't have all new time highs. I don't think we're headed for it's peaking anything of last year, like December. The QQQ is nowhere near that. I think that it's my personal opinion that we will kind of float in a range. I could see us going down. I could see us again. I could also see the government being like, you know what, inflation's not so bad. More tax for us. If you look at in the U.S., they released this stimulus, this Inflation Reduction Act, which is literally like almost $1 trillion in stimulus, and the majority of it is like a tax overhaul where they're like doubling the size of the IRS. It feels like, so they're really just trying to raise money so that they can give more money out, which again we know leads to more inflation, which the government wants. Like their goal is to devalue the currency to nothing over 100 years, right? Like at 3%, their target inflation rate, the currency devalues over 100 years to almost nothing. That's what they want. It's going faster than they want. Obviously we talk about no change in the last month, again, mostly due to gas prices and commodity prices falling. Rents in many areas are up 20% year over year. Here in London, Ontario, I'm not in London, Ontario right now, but in Toronto it was 28%, I believe, year over year. So July to July, if you had a $2,000 a month apartment, it's now like ballpark $2,500 a month for the exact same apartment. That's huge. The average person is renting, and the average person can't afford to pay 28% more for, yes, just saw a chat pop up. Yeah, I'm in Toronto right now. We've been in Toronto all week. We'll be in Toronto till Friday morning. But yeah, I mean, the average person can't afford rents at a 28% increase year over year. And it's not even a good thing. Like as a landlord, I'm a landlord, I have some properties. It's not even great because unless you got a long fixed rate mortgage, you're locked in like a 5-year super low rate mortgage. You locked in December before things ripped up. By the way, sorry if my kids are in the background. I have very little soundproofing here. Again, I'm just not at home. So I'm making the best. I always go live no matter what. I'm making the best of the situation. Here we are. Literally, my phone is resting on a box. I don't have my dongle. I don't have my light kit. I don't have anything. So here we are, the new iPhone 13, making the best of it. But yeah, tracing back to the train of thought, it's like builders are going belly up. Builders are feeling the pressure. Commodity prices have gone down, but are still relatively high to build, and there's no demand. Like we thought for a long time there was a ton of demand for housing, and it's like, no, the supply we have is actually is building. If you look at most of the local charts here that I've been looking at, supply, the number of available listings on the market is like this, and if you factor in those who are canceling and removing the listings because they're not selling, it's actually even way higher. So supply is going like crazy, demand's falling. That has lasting effects on several industries, right? Like we're talking about Lowe's, Home Depot, anything in the service industry or realtor industry or anything related to building and servicing houses. It's a huge chunk of the GDP. Shit just doesn't work at 8%. Every city in North America with more than 1 million people, the average investment property is selling at like a 4 to 6 cap rate, best case scenario. A lot of them in like LA, New York, talking about 3 cap rate. A 3 cap rate means the asset before any debt returns you 3% if unlevered. Now you apply debt to that. Normally that's a good thing. You borrow at 2.5%. There's a small spread there between the 3% return on asset and 2.5% cost of debt. For the first time in over a decade, we're looking at 6, 7, and 8% commercial mortgages right now. And the B lender stuff is 9, 10, 11 with lender fees. So you're talking about a cost of debt that's 2.5 times higher than the return on the asset. Makes no fucking sense. You don't want to own any real estate. So what's going to happen? Rents will climb with inflation, right? But you'll think that'd be profit for the landlord. No, because the cost of debt, the largest single line item for a real estate investor is their cost of debt. And cost of debt is rising along with everything else. But substantial rises, right? To the point where like literally makes sense to buy no buildings unless your goal is to be cash flow negative and to speculate that in the future rates may come down to where they were in December. Who knows? We may never see those low rates again for a long time. Who knows? You're speculating. As real estate investors, we don't want to speculate. Once the comps start solidifying at these lower prices, it will push things further down. And I think it's really, really important to be cognizant of the fact that a lot of the speculating, FOMO, fear of missing out, energy dries up quick in a down market, because now you're not like, hey, I should have bought that house, it's gone up in value. It's like, whoa, if I wait, I can buy this same house for $50,000 less. So why would I buy today when I can buy tomorrow? That's a scary thought. That is not the kind of thought that drives development, that drives advancement, that drives people increasing the number of units and building. So we are going to eventually end up in a very bear market in real estate in the next 24 months. Hopefully there'll be a time where we get inflation back under control and the government starts some quantitative easing, or at least stops cranking rates up. Because right now we're still in the tightening phase. Rates are still going higher. And every time rates go higher, it's immediate pain for real estate. It makes deals harder to get done. It's bad for business, bad for real estate, it's bad for the economy in general. The government can't even sustain its own debt. The government is trillions in debt to other countries, right? And they can't service the interest payments without investing in heavily taxing, which is, again, why this Inflation Reduction Act that Biden put through, which, by the way, I don't think any Republicans voted for it. It was gridlocked, and Nancy Pelosi tipped the vote, so she made it go through because her vote was the tiebreaker. Totally against that. That was a very stupid move on their part. It will help in the short term, but it will cause pain in the long term. But you can see the writing behind, sort of the main facade is that they're hiring, I think it was 88,000 or something, a whole stadium, and don't quote me on the exact number, but in that range, like a lot of IRS agents. They are trying to grow their revenues to cover the new, like the number one cost for the government is going to be servicing their own debt. They've been spending up to their eyeballs. And one way to get out of debt is to print. So I think they would probably err on the side of like inflation over crashing the economy, because as they raise rates, they crush demand, and of course that leads to reducing inflation. they don't want to reduce inflation too much. They like inflation. Inflation allows them to basically tax all of your assets. So if you have a $100 house, that's a $100,000 house that they inflate in value to 110,000 next year, and then you choose to sell it, or any of your assets, they inflate all your assets. They get to now take a percentage of that. They take 35% of a third of your assets. And if there's no real change in value, if a $100,000 house is the same house, but now sells for 110, and the buying power of that money is completely unchanged because the inflation has forced the value of the buying power to be basically reduced over time, you think you're getting more money. You think the $110,000 is more, but it has the same buying power as 100 did last year. Then there's effectively no growth at all. And they've now taken 1/3 of that capital gain that they created through inflation. So it's great because they can basically just devalue your money and then take a percentage of it, a third of it. So they can inflate all your assets and they can take from the rich. So it is actually really a great sound strategy for the government to try to get themselves out of this hole that they're in. But we're in a rock and a hard place. I don't see any real major upside. I don't see us roaring to all-time highs. The economy is grinding to a halt. We're about to experience a longer bear market. Now, bear markets don't last as long as bull markets, historically speaking, so we should have a really nice setup, I think, in 2024, 2025 for a really strong bull market. So if you can position yourself now in the next year, 18 months, to be able to buy at least dollar cost average in through these dips. And by the way, we're not on a dip right now. We're in a huge bear market rally. We just went up 18%. Now is not the time. The time to buy was in early July. That was a great time when the NASDAQ QQQ was at 270. That was a great time to be dollar cost averaging in. And now I'd say if you did do that and you were dollar cost averaging in at bottoms, always on the big red days, dollar cost average in, this might be a time to take a little profit. Say, hey, I'm going to take a little off the table. I'm up 18%, 20% or whatever from where you were a month ago. Take a little bit off the table. I think there's a much higher probability that we correct from where we are now, a little bit down, than we rally and you miss out. It's always better to take some profit than to lose money. Losing money sucks. It's better to take a little profit now. And psychologically, making $100 and losing $100, losing $100 is much more painful than making $100. That's just how it works psychologically. So keep that in mind, that it's gonna fuck with your psyche when you're investing. And let me do some Q&A here. I see some questions building up. Hello, good to see you live. Hey, thanks. Good to see you too. Joseph says, hey, Mike, love what you do. Do you think Florida is a good market for long-term tenants, or is it much better off for vacation rentals? Well, it depends, right? Florida is 5 or 6 states all put together. It's so diverse and so different in, say, northern Florida than, say, the Florida Keys or Miami compared to Naples. Totally different. You have a couple hours and it's one is if you go to central Florida as an example, not Orlando. Orlando's like Disney, it's the whole Disney, vacationer crowd. But if you go a little bit north of that and you get into the hick areas, it's very much a redneck sort of backcountry type of vibe. And yet you can go to Naples and it's super posh, high-end, old people. Just wherever you go, a bunch of different places you can go all along Florida, and it's totally different. So there are areas where, yes, in Florida, you can do the vacation rental, 100%. There are other areas where it's the middle of, I don't want to say bumfuck nowhere, but it's nowhere. And there is no Airbnb play there because it's the middle of nowhere. And you could buy units. I was seeing some 50-unit buildings that were $50,000 a unit, in which case that's 2% rule. But again, it's in the middle of nowhere. You're looking at a small town with 20 or 30,000 people that's not in Orlando or, any of the Daytona or, Tampa or Miami or Naples, away from all the major metros. And you can pick a smaller city in the middle of nowhere and you can get great caps. Cap rates are better the more rural you go, but there's risk with rural, and it's not as desirable to own property in rural as opposed to in larger metropolitans. You just have more options in those areas where infrastructure is stronger in general. But yeah, I mean, for sure, there are opportunities in Florida for all types of markets, and it's hard to say that one is better than the other. It depends where you are. And so you have to be a lot more location specific. Benefitness Studio says, went back and watched a bunch of your live streams today. Hey, it's awesome. Intentionally buried my head in the sand so I don't stress about these dips. I now check in once a month to dollar cost average. It's nice to watch the daily. Yeah, I mean, there's something really nice about, dollar cost averaging and just, logging in every couple of weeks and saying, hey, how am I doing here? You're not on margin. You're not taking huge risk. You can just let it ride because 5 or 10 years from now, if you're diversified, you're buying the indexes and you're buying a little piece of every company. It doesn't matter if one company goes bankrupt or one company rips to the moon. You don't care because you're invested in the whole of the world, all the markets. And so, what do all the markets do over the long term? They beat inflation for one, so you outpace inflation and you grow. You grow, grow, grow. And short term, there might be pain. It's really hard to time the market. I've been trying. It's very difficult. I was doing very well up until early July, and I've been shorting 2 to 1 since mid-July. So you can tell how my account's doing right now. But like Michael Burry, I am holding and waiting for the right time to realize a lot of these shorts. I think I'm short the QQQ. Like I have like a $5 million short on the QQQ right now. So if it were to rip down, I can make some really great money. We'll see. We'll kind of see what happens. Today was a great day. It was a 6-figure update for me. I think we're headed for some more pain. I'll probably baby out. I don't have the steel balls that most of the shorters do. I just feel like I don't want to buy right now. And so when the opportunity presents itself to buy, it will be at the next bottom of the next dip. And when that comes, I want to be loaded with cash. And so shorting allows me to have extra cash to turn my short position long at the bottom and dollar cost average in. Now, if I'm wrong, I missed out on some gains. That's okay. I can afford to miss out on gains. I would much rather miss out on gains than lose a whole bunch of money at the bottom and not be able to buy. I'd much rather be able to buy at the bottom. So I'm waiting for that bottom. All the market fundamentals, to me, speak to further pullbacks. I think that layoffs are coming. As those layoffs come, people will experience pain. Real estate is on the cusp of being in a full recession. A lot of businesses are on the edge of that, despite the fact that inflation is 10%, right? Like 8.5, whatever. Effectively, we're in a really tough spot, and I could see the Fed slipping up, and I'm waiting for them to slip up. Midterms are coming in the U.S., so there is that, I think, desire or need for the government to want to placate and sort of keep all the masses at in a rosy position. So I think in the November we could see some artificial pumping from the government. We could see some stimulus. We could see them being easy on the rates, being very dovish as opposed to being hawkish. We'd like to see them. I would prefer if they just cranked rates, fixed inflation, and then said, okay, we've solved this issue and move on, right? That's a lot of pain for a lot of people, layoffs and pain. So they'd rather drag it out over a longer period of time. I think probably we'll see some more pain into this winter. That's when real estate's really going to start hurting. I have been slowly selling off a lot of my properties. I have a couple left that I'm debating keeping. They're strongly cash flow positive, even at 8% interest carrying costs, they still cover. So I mean, even if rates got crazy, I would still be cash flow positive. But I'm at a point where if someone will give me a decent valuation for the property and they're looking at it long term, it's a win for them. If they're going to acquire an asset at a discount now, I have a couple properties. I have one that I bought last year that I would sell at what I bought it for. I bought it last spring, so about a year and a half ago, and I got a good deal on it. And it's downtown London, great area, 3 units. I would definitely sell it for what I bought it for at this point. That's crazy. It's like, why did I even buy it? But that's where I'm at right now. And so that's where we're at. If you bought a property this year in January, your entire down payment's gone. If you bought a property in the fall in 2021, all of your equity is gone unless you bought really smart under market value. But the majority of people who bought houses, that hasn't clicked for them yet. And when that moment clicks, it's like, hey, I've lost my entire life savings that I put into this down payment. And if I were to sell today, I owe the bank $100,000. That's a scary moment. Well, at the same time, inflation is crushing them from all ends, and then they get laid off from their job. It's really a perfect disaster. And most of the mortgages going out right now in Canada, here in Ontario, people can't qualify with stress testing rules on the fixed rate mortgages. They're all going variable. And rates are still going higher. It's a scary time. So I think that there are some scenarios that could play out that are pretty disastrous, and I don't want that for people. Going through a recession sucks. I don't want that for anyone. But it's coming, and I don't know how deep it'll be, how bad it'll be. Maybe it'll just be the bottoms we saw a month ago, 20% pullback from where we are now. I don't know. Maybe it'll just be, we'll be flat as inflation crushes us for the next 2 years. If we bounce in the same year-to-date range we are now, plus or minus 20%, for the next 2 years while inflation runs crazy, if they decide to go that way and leave inflation, you've really lost 20% of your money because inflation has eaten it. So even if it stays the same, you haven't really won at all, you've lost. So it has to go up and rip for you to even come out, right? But yeah, so real estate right now, not proving to be a great inflation hedge. We had always thought real estate was a great inflation hedge. From the cash flow perspective, yeah. I mean, I'm seeing rents coming up 25%, but it only makes sense if you're on a fixed rate mortgage that you can continue to hold. And that's a good piece as well. I will say that, like, the market's not going to collapse because, again, most people who have commercial properties have great equity in them, who have rental properties have great equity in their properties because they've owned them for a few years. They got lots of margin. They've locked in great rates in most cases. Hopefully it's fixed and not variable, and rents are going up. So if they, here in Ontario, you can't get a tenant out, but if you could get a tenant out, you could realize if you've had a tenant in the same building for 2 years, they're already 40% under market. In 2 years, 40% under market. So if you can turn those tenants around, then you can get a huge lift to help cover the increased cost of hydro, maintenance, property taxes are ramping up as well. All these things are at huge rises right now, right? And that's assuming you have a fixed mortgage. But anyone new looking at a deal, let's say you were doing a renovation and now you're finally finished your BRRRR and you're going to refinance. You're fucked. Good luck. All these flippers out there who are refinancing these projects, who had these rosy projections, like, no, shave a quarter of the value off. And now what happens? Oh, you actually have no BRRRR at all. There's nothing to take out of it. And by the way, when you refinance, you were hoping to refinance at 3%. Now you're going to refinance at 6.5%. Your mortgage payment's double what you were expecting. You're cash flow negative $1,000 a month. And if you try to sell, there are no buyers right now. There's a huge supply of properties, but there's no demand. So that's the kind of situation we're actually in right now here in Ontario. So could be a decent time to buy for the right properties if you're a long-term investor, and the numbers work. So run your numbers at 6%. Run your numbers at a little bit higher rates. And if it still cash flows, buy it. I mean, we're in a dip. I don't know if we're at the bottom. It's impossible to ever see the bottom. But we have pulled back in some markets 30% right now from where we were in February. That's a drastic drop in real estate. For it to drop 30%, that's a fucking crash. And we're not even done yet. Like, I could see us, it's eased by the fact that over the last 2 years, we had like 80% appreciation in some areas. So it's like, it's not that bad for most of us who've been in the market a while. But if you just got into the real estate market a year ago, it's like, shit. I mean, crap. Yeah, it's a shit sandwich. And people I think we're a little early in the world realizing that we're down this much. The media is starting to pick up on it, starting to share it. But we're in for a winter. We're in for a real estate winter, probably a crypto winter too. Yeah, shitty times ahead, guys. Be careful. Keep cash. Keep some cash aside. I'm still gonna buy in some. Like if I was someone sitting with cash on the sidelines, I'd probably still look to find a property under market value. Find someone who's desperate to sell, who has a need for the cash, and you say, hey, I'll give you, 70 cents on the dollar of what you would have gotten in February, 60 cents on the dollar of what you would have gotten in February, and they'll probably take it. Get into property and it can be cash flow positive, and then when rates do fall, which they will, I don't know how far they'll fall, but they'll definitely fall a bit from where they are now, and you can go refinance the property. Boom, and now you're in a super cash flow positive deal that you picked up during this sort of era of a bear market in real estate. And it will flow into stocks as well. Da, 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 da. Thanks, by the way, for all the praise and stuff. You guys are all so nice. Brian says, hey, Mike, what are your thoughts on the increase in margin rates in Interactive Brokers? Are you still using margin or waiting until rates go down? Brian, Interactive Brokers still has margin rates at like 2%. It's below prime. You can borrow from Interactive Brokers against your stocks at below prime. That's fucking unreal. There are no banks that even get close to how good Interactive Brokers is lending against stocks. Banks will lend against stocks, but they'll lend at like prime or prime plus a little bit. Prime minus is like, it's fucking unreal. Even in real estate, you barely get prime minus. So Interactive Brokers is by far the cheapest debt you can get, and it's just security against your stocks. So yes, I'm a big fan of using it, but use it responsibly. Use it carefully. If you have a really nice, diversified, quality portfolio of blue chip stocks, you own the whole S&P 500, some NASDAQ exposure, some Toronto Stock Exchange, some Brazil, Russia, India, China. I guess it's possible to own Russia right now. Very difficult, I guess, to own Russia. I do own the Russian index, actually. I have 6 figures in the Russian indexes, which are currently frozen. You can't trade them. But they were trading at peanuts on the dollar before they froze them. And I'm like, geez, Russia's a powerhouse. Like, forget the blood politics and all that shit. Like, their economy that is huge. They're the largest country, I believe the largest landmass in the world. They have huge natural resource advantages, and they have a population of well over 100 million people. You can't ignore that market. That's a good slice of the world's wealth. This shit, too, will pass. This war in Ukraine shit, it will pass. Russia's nicely allied with China. And I gotta say, China's gonna take over the US. They're fucking, economically speaking, they will overtake the GDP of the US. They will become the largest economy. So Russia's in a good position 10 years. So for me, I'm holding on to those shares for 10 years. Someday I'll get to brag to you guys about how great that position turned out when I got to buy the Russian index for pennies on the dollar before they delisted. Or sorry, froze. The ability to invest into that. So yeah, I mean, as a small percentage of your portfolio, you should have exposure to all those things. Circling back to the margin piece, if you did have a good diversified quality portfolio that could handle the test of time, you should be able to put, say, borrow against 40% of it, let's say. If you have $1 million in a portfolio, you could take up to 400,000, no problem, right? Up to 400,000 is like taking 40% of the value. So I think you'd be really careful. They'll let you go, I think 70% loan to value, but just be careful. Don't go all the way. Like, they'll give you up to 700,000 line of credit that floats based on the value of the stock portfolio against your stocks. I wouldn't take it all. If they'll give you 700,000, take 300,000, and then if the market dips, no big deal. You've got margin there. You're not being margin called. You've got available room. So if the stocks tank out of 20% from where they are now, we're already in a recession, but the 20% could happen. Boom, your 800,000 is worth, or so your million is worth 800,000. It's like, okay, well, you still only borrowed, say, 300,000. So 70% of 800,000 is 560,000. So you're still got lots of room on your line. You're not at risk at all. So I would definitely take advantage of using some margin. A little bit is almost risk-free, like use 20, 30%. Why wouldn't you use other people's money to buy property, whatever, all that, leveraging off of the stock portfolio you already have? Don't sell the stocks, keep them, and you could even have a short position and still you could use margin against that as well. So if you're bearish, you could play stuff that does well in recessions. You do a lot of pair trades where you protect yourself and you play the other side, right? The stuff that does well in times of recession. So yeah, big fan of using leverage wherever possible, assuming the cost of debt makes sense. So as rates rise, it's less attractive to use debt. But if you can't use debt, why even get involved in, like, that's the whole value in business and in real estate, is that you can use leverage to ramp up your returns, right? So yeah, definitely want to use leverage carefully and responsibly. Benefit case for becoming a realtor: for finding deals, saving on commission, cons of doing this. So I became a realtor myself. For those who don't know it, I actually am a realtor. We have a brokerage, so if you do want to buy a property in the London area, we can hook you up. Happy to help in that regard. There's not a lot of people who will do a better job telling you straight up if a property is sell it or not. Like, we don't need the money, so we'll give you the straight up opinion. So that's an advantage there when you're working with an investor only realtor trying to buy investment properties. You get the latter part of that question was like pros and cons. So cons are that you're going to burn like a year of your time to get your license here in Ontario. It's a 2-year program now. So you're going to invest a lot of time, which is tens of thousands or hundreds of thousands of dollars in value that you could have spent doing something else. So there's that. So you lose a lot of value. That's a con. And time invested, which is a con. And then once you have your realtor license, you're going to pay a bunch of initiation fees to CRE, ORIA, your local, for me it's L-Star, your local boards and whatnot. And then your broker is going to charge you per deal or a flat fee or desk fee. Typically you're looking at like the first year around $9,000 in fees. So your first deal or two are just going to fees. And then every year after that, one deal you do goes to covering all your fees, your errors and omissions insurance, your dues, your all of that, right? Your accesses to all your logins. So it does cost to be a realtor. If you don't do any deals that year, let's say you do 10 deals and then next year you do no deals. That year is it's pretty shitty. As far as data goes, you can partner with a good realtor and get access to all the data. Most of it you can find through House Sigma and other various means. The data is becoming more and more available, so there's not a huge amount of extra, but I would say I've definitely developed some edges being my own realtor, that I can go direct to source and submit an offer when I want to. I can have my assistant write up an offer done. You know what I mean? I don't have to go through a third party, wait for them. If they're busy on a Saturday, they can't do something. Or I'm driving by, I see a property. I can go on my app and I can go and walk into the property. I'm licensed, I can walk in, done. I don't have to book a showing. Like I'm there, I'm in front of the property, I want to go in. I call the agent, I go in. So there is some speed to market, like speed to offer advantages. Yeah, I save the commission too, I guess. My own commission, cost me nothing to list, cost me nothing to, I guess I get commission back when I buy, I get 2% back. So that's kind of cool. Like if I buy $1 million house, I get $20,000 check back that I can use toward off the purchase price. So yeah, I mean, there are some advantages to being a realtor, but you have to do enough volume for it to make sense. The amount of volume that I do right now, it's like, I could also not be a realtor. For me, it's like, it's a cost of being able to act quickly. And so even if it didn't save me in net commission, I'd be like, it's still worth it for me because I like to be able to be in control of the situation, to be able to act quickly when I need to. Bow, bow, bow. Oh, I just saw this pop up here. Is there a Russian ETF I can buy in Canada? The only one I know of is iShares Russia, but so I don't know if any you can buy right now. The shares I own are RSX is the ticker. It's also frozen right now, so who knows? The value sometimes jumps around, but it's not being traded, so who knows what the value is. I'm sure there's some backdoor options contracts you could trade on Wall Street to simulate cashing out of those. But yeah, it's not because you gotta remember that like this might be a little conspiracy theory-esque, and I don't want to go down this rabbit hole, but like NATO hates Russia, and NATO has basically collectively absorbed every single country around the whole EU or all the way around Ukraine. So it's like NATO versus Russia, and it's basically a proxy war. But for sure it is fueled by NATO. They are literally funding the war and sending guns and everything there. And they've been bullying Russia for fucking 30 years, breaking tons of treaties too. They are not innocent in this. I will say that. And so, of course, it is their prerogative. It is in their best interest to delist the trading of Russian equities. Why would they try to help the Russian capital markets? They want to starve them, right? Of course, NATO would want that. So, but again, I'm thinking long term. Hatchets will be buried. Probably Putin will die. I heard he has blood cancer. What has he got in there? 10 years left? He's in his 70s. Like, how much longer will this go on? There'll probably be some sort of solution. And as China takes over as the world power, Russia seems decently allied with China. So I think Russia will be just fine long term. So if you do hold some shares in the Russian indexes, you'll be fine. Yishi, how you doing? Favorite books? I don't have any really good books right now. What books have I read recently? In the last month, I read Atomic Habits and Alex Hermosi's $100 Million Offers are the two that I've most recently consumed. So I would throw those out. They're both great books. I don't know if they're necessarily related to being a realtor, but you could definitely, the $100 Million Offer, both of them have applicable pieces that could help you in being a realtor. Vernon says, hey, Mike, say you have $200,000 cashed out for a refinance on a property in this current market where we are essentially in bear territory on most assets. Would you invest a lump sum or payment versus investing? So I think what you're getting at is, do you dollar cost average in small amounts or do you dump all in at once? So I think it's very prudent to dollar cost average. So say you have $200,000 to invest. On the next red day, if you wanted to go long, you would put a quarter into the market. And then the next red day you see, you put another quarter in, another quarter in, another quarter in. You slowly average in. I'm more of a fan of that strategy as opposed to just dumping all in on a day. But 5-10 years from now, it doesn't matter. Time in the market as opposed to timing the market is the quote that I like to use when people ask me. Next question was, okay, hey, how you doing? What's up? A bunch of good people joining the chat. Appreciate you guys. For the 50 people who are watching, hit the thumbs up button. That'd be cool. Joe says, where do you invest in the U.S.? So right now, the only place I'm interested in investing in the U.S. is in Florida, and that's because it has strategic lifestyle benefits for me. I want to end up spending time there, and I don't want to own properties in, say, like Massachusetts or some random place because I don't want to be there. I don't want to go there, or Cleveland or something like that, because I have no interest in going there to check on the properties, to build systems, and go deep in those markets. It has to be, for me, I'm not just chasing a return, I'm chasing a lifestyle. And so I do want a good return, and Florida can provide that in several markets, but I also want it to align to my lifestyle. Is Canada a no-go for investment properties? No, not necessarily at all. I think Canada's a fantastic place to be investing. Over the next 30 years, I think Canada, like how I like Russia, I like Canada better than Russia. Canada is so natural resource wealthy. It's a fantastic country with a great number of assets, good people, quality education, just in general, a great country, just very poor management. Justin Trudeau's Liberals and the NDP party are just garbage, just straight shit managers of this country, unfortunately. Their goals are not to grow us on a global stage. The one thing they're doing that I like is increasing immigration. I love that they're bringing people in, and hopefully they're bringing people who have money and have skills and are educated. That's what we want. We don't want refugees. I mean, some refugees, okay, it's good, but ideally we want to be bringing in skilled people into this country who will come and work, who won't abuse and suck from our system, but will come and work 70 hours a week. Their dream is to work and build this country. That's what we need. That's how we built Canada to be the great place it is. Like, my grandparents came here and they worked 2 full-time jobs. That's what you did when you came here. Now I have immigrant tenants applying my units, and like, I have 7 kids, and I drive Uber on the side. I'm like, why don't you work full time? Like, oh, I get money from the government for my 7 kids. If I work, I lose that money. It's like, why are you coming here? To suck off our system? For a better life for you? Don't be selfish. Fucking give back more than you receive. It angers me when people suck from the system as opposed to giving. And I think when you come and you get graciously accepted to one of the best countries in the world, you should be thankful. And there should be, reciprocity. You should want to give back and contribute and be a good, upstanding member of society. Fuck, the culture's bad. The culture is just fucking toxic right now, in general, in North America. There's just a laziness there's a number of problems in the culture in general, which I don't want to get into right now, but it feels like it's going to shit. Especially among my generation, and the generation younger than me, the Gen Zs. There's no work ethic. There's no morals. So, fuck. Anyway, I don't want to go on and make this political. Everything's political, but, good evening, Mike. Do you think it's more likely equities crash 50% or we see 100% inflation? Market is flat and we have 50 cents on the dollar. So, I have no idea what comes next. I think that we will float on the side of a higher inflation as opposed to lower inflation because it's easier for politicians to sell. I think that we will have more stimulus packages and it will be more like a rocky thing. It won't be like a straight down. It'll be like overcorrecting, undercorrecting, because they're just not that good. No one's great at trying to move between a rock and a hard place. So it's tricky. Would I bet the farm that we have a 50% pullback? No. Because though we deserve one, the government loves to prop. They love to prop the market up with stimulus and kick the can down the road for someone else to deal with because they're all 80 and they're going to be dead in 20 years and they don't care. That's probably a small part of it. I'm being a little facetious here, but yes, I would say that I don't know is the answer. Do I think we're going to rally to all-time highs? No. I think we're in a bit of a bear market and there isn't a whole lot more upside to where we are right now. Now, if you had another pullback, it might be a different situation. Someone says, where is not a good place to invest in Canada? Edmonton. Don't go there. Don't have to buy a house, please. Well, that's funny. Toronto, London. There's some great places to buy real estate right now. It's interesting, though, that Calgary isn't down that much. There are certain markets in Canada right now that are not down. But here in Ontario, we're down 30%. So it's very local. It's very market specific. Edmonton's great. I love the Edmonton Mall. I enjoyed my time in Edmonton. I have a friend who's looking to move to that area. And so it's great. It's not a place I'm looking to invest. So Yeah. I don't just go to an area chasing returns. And if I was going to do that, I'd pick a better place than Edmonton. But if you want to live there, cool. If you're already there and you have strategic advantages, you should buy real estate where you are. There are distinct advantages to investing in real estate where you physically are. We have some locational benefits as opposed to investing virtually. You're going to have to spend some time in that market to understand it and to have a competitive advantage and to build one. Better to use, so do you use WS for index investing as a Canadian, or is it better to use US platforms like IBKR? Well, IBKR has a Canadian platform as well. WS stands for Wealthsimple. So Wealthsimple is great because there's no cost to dollar cost average in. It's free to buy in, so there's some distinct advantages. It depends is the answer. For some, it can make more sense than Interactive Brokers. I like to use margin, and I like how cheap Interactive Brokers margin is. They are by far the best borrowing facility that requires no approval. You put $1 million in, they give you a line of credit for $700 immediately. It floats based on the value of your stock portfolio, but there's no application, nothing. Automatic line of credit, 70% loan to value at prime minus. That's fucked. I'm sorry. Questrade offers like 7% interest. They're at like 2. The competitive advantage Interactive Brokers offers is just amazing. The only reason I don't want Interactive Brokers stock is because I'm like, how the hell do they afford to be that great? I wish I had a promo code. I do have a promo code, actually. I have a promo code. I should share it in this video. Message me if you do want to set up an Interactive Brokers account and fund it with money, because I think we each get $100. I do have a link for that somewhere. I have a referral that I can send you a link for. I'm not going to put it in this video because I'm lazy and that takes effort. But if you seek me out on Instagram, I'm Mike Rosehart, or find me on Facebook, look for the blue check mark on Facebook. Again, Mike Rosehart is my name. I will send it to you. Cool. How's the new Honda van treating you? It's great. The Honda Odyssey is just fantastic. We love it. It's perfect for our family. I have 3 kids and a busy life, and I have a dog, and I've always got someone with me at all times. Like I got, I'm driving the mom with us, or my friend, or Jonas is with us often. So yeah. Someone says the anti-Russia hysteria has definitely gone too far. It's bordering on World War II, Japan internment camps. Yeah, I think it's a little much, the propaganda that NATO's kind of floating. I'm sort of in the middle. I'm like, it's shitty what's happening. I feel for Ukraine, and I feel for the people of Russia too, that are also suffering right now. They're being strangled, right? It's shitty for all sides. I want this to end. I don't want there to be conflict. At the same time, to say Russia has no economy, it's kind of propaganda, right? Like, they're a fucking powerhouse. Anyway, so will I not invest in Russia because of this? No. I'm going to continue to hold the Russian index that I hold, which is currently not trading on the open market, but eventually it will trade on the open market again and whatever. Do you invest in precious metals? A little bit. I have some gold, some silver. What are your thoughts on crypto? So I've disposed of most of my crypto. I will be entering a position again on Bitcoin and Ethereum. I do still have a position. I think ETH is going to rip as 2.0 comes out in September. I think we'll see ETH hit 5,000 a token. It will decouple from Bitcoin, but then I think could see a crash coming for ETH in the next year as well. So very volatile, risky asset. Again, crypto, I love crypto as an asset class. Should be a very small percentage of your net worth. 1%, 5%, very small percentage of your net worth. Put a little bit in, and don't look at, like, it has to be a long time horizon. 10 years from now, your Bitcoin worth 10x, right? But diversify, buy a little bit in a bunch of tokens, ideally Bitcoin being your primary, but you could put 2% of your holdings, 2% of your crypto holdings. So of your entire portfolio, 5% is crypto. Of that, 1% of that should be in some shit coins. You can pick, I don't want to say shit coins, but like Chainlink, or ADA, or Solana, or a lot of these smaller top 25 projects, Ultra, UOS. Those are projects that I think you could put a little bit of money in that may 10 or 20x, and if they do, it's a sweet return. It's something you keep on the side to play with, a little dabbling. Don't bet the farm. Don't put everything you have into crypto. That's not prudent. There are people who do it. I have respect for the people who have balls to do that, but it is very high risk. You could just as soon lose everything too, so be careful. It's very volatile. Though I think it will do fine long term. We could have a point where Bitcoin trades at $8,000 a token. Can you hold as your, say, $100,000 investment is worth $20,000. It may go back again to $150,000, but can you hold for that 6-month period where it's a crypto bear market and you're down that far? The volatility is very high. That said, all of the smart minds in tech right now, the smartest people coming out of Harvard and MIT and all the great schools, they want to work on crypto projects. They want to work on blockchain. It's the future. To deny the fact that blockchain technology is not going to change the world, that decentralized finance is the future, that's just retarded. That's just being bold-faced stupid. It is the future. Do we know which tokens will take over? No, we don't. But we know the smartest and the best and all of the resources are flowing into developing these projects. And if you put these smart minds towards something that they find fulfilling, they will build something great. And even if it isn't good enough now, it will be better and made better and built upon. And so I think the future of the tech is there. The valuation, it's hard to pin. Like, it's hard to pin down the exact valuation. What is a Bitcoin worth, right? Could be worth a hell of a lot more. There's already a huge node network, and the network alone gives it so much value. And I don't know. It's tough. It's very tough. It's not something that, I'm not a crypto bro. I'm not like 100% crypto, but I like it as an asset class. My mind has changed from where it was 2-3 years ago, where I was very bearish on crypto. So I would say, yeah, that's my thoughts on crypto for now. I think we're going to have a lower bottom and a opportunity in the next year to buy Bitcoin at a discount from where it is now. And so for that reason, I would wait. If you have some and you want to hold. Thoughts on investing in Canadian banks given the sell-off over the last few months? Also, would you bet long-term on VSAN index? I don't know. The banks do well when rates are rising like this because their margins get juicier. Specifically, they can, like, though the cost of funds is increasing, they're able to bake in more, as rates are higher, they're able to bake in a little bit more fee for themselves on average. But then volume is down because people aren't borrowing as much. So I don't know. The banks will be fine long term. I don't think they're going to go anywhere. They are secured to a lot of Canadian real estate, which is crashing right now. So there's that. There might be opportunity to buy towards the bottom because, that could be a play. Yeah, that could be a play. I could see that. But I need to see a further discount before I'd be interested in going long on the banks right now. But again, if we see those yields start creeping up to 7-8% on the banks, it's like, I got to get on that. I got to get a little taste. I got to wrap this stream up. I got to go, guys. I got a friend here too I want to spend some time with, and I need a haircut, jeez. Will ETH be back to all-time high? I think so. Yeah, for sure it will. It'll break all-time high. Oh, geez, if you had to pick one stock for life, what would it be? That's tough. I believe in diversity, so I'd pick the biggest stock, Amazon. If I'd pick one stock, Amazon. They're the biggest. They're going to rule the world. I want to be invested in as many segments and sectors as possible. And Amazon is the future of their AWS, Amazon Web Services, cloud hosting is top tier. Forget all the shit they sell on Amazon on their website. That's secondary to their main business, which is data storage. They're the biggest. And that's where they have power, is in all they store every website's fucking data in the world is on their servers. So Amazon, 100% all day. If I had to hold one stock, it'd be Amazon. And not that I love Amazon more than other stocks. It's just that Amazon's the biggest, and so I get the most diversity. And I want to be ideally, if you told me I had to buy one stock, technically I'd buy an index, because then I own a little piece of everything. That's way better than anything else. But if I had to pick a stock, like a company, not an index, I would pick Amazon. They're the closest thing to an index, in my opinion. You might think Apple, but no, for me, it's Amazon. That's it. That's the answer to that question. It's been a great 50 minutes. I really appreciate everyone for tuning in. Remember, the secret to unlocking wealth through you is 3 levers in control of your financial future. Spend less, earn more, and maximize returns in the difference. All right, thanks, everyone. We'll see you next week. You guys know where to find me in between our weekly sessions, but every Wednesday, 7 to 8 p.m. Eastern. Look forward to seeing you all. And thank you, everyone, for watching and tuning in. For all the people watching the replay, jump in the comments, say hi. It's always nice to share the video if you share it with a friend. And if you comment and engage with the video, then it helps it to do better. So thank you so much, everyone, and we'll see you next week. Bye.